everyone, if you are building a dividend portfolio or thinking about long-term income, I want to share a transparent look at my January dividend income, what paid me, how much and how I'm managing these positions going forward. This is from my roughly $356,000 portfolio with the dividends coming from 4 different holdings this month. So let's get started with the first one, which is JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. I currently hold 95 shares and this month it paid me $55.10 or 57 cents per share. I reinvested the entire dividend, which bought me close to 1 additional share. I'm currently up about 7% on this position, and my strategy with JEPQ is pretty straightforward. I add more when the price drops to its 200-day EMA on the daily chart, or if the Nasdaq pulls back around 10%, and I'm consistently reinvesting the dividends for the long term. My goal is not to time it perfectly, instead focus on steady accumulation when there's a technical correction. JEPQ currently holds 109 companies with roughly 51% weight towards technology, and the 30-day dividend yield is 10.65%, which is very strong. When I compare it with other Nasdaq-based ETFs, this one stands out for income, especially since it pays monthly, which works well for compounding. Next up is Lam Research. From Lam Research, I received $15.46 in dividends for my 59 shares. The dividend yield here is just 0.42%. So this isn't a dividend focused position for me. It's a growth stock in my portfolio, and I do like that the company still returns some capital to shareholders. But the main reason I hold Lam Research is because of their long-term growth story. I'm currently up over 200% on my position, in which I already sold half of my shares at around 120% gain, which allowed me to take out my original investment. Because of that, I'm not too concerned about short-term price movements anymore. I plan to continue holding the remaining shares long-term and let the story play out. Next up is Realty Income. This month, Realty Income paid me $19.69 for my 72 shares at 27 cents per share. I'm currently up about 12% on this position, and Realty Income has a 5.27% dividend yield, and since it's a monthly paying REIT, it plays a steady role in my income strategy. My plan here is to continue accumulating over time and reinvest every single dividend. This is more about consistency than trying to maximize returns. And the last position, which is the largest dividend payout this month, is LTC Properties. From LTC Properties, I received $67.72 for my 356 shares at 19 cents per share. Once this dividend reinvests, it should buy me close to 2 additional shares this month. I'm currently up about 6% on this position, and LTC is another REIT with a 6.25% dividend yield, and it also pays monthly. My goal here is to grow the position to at least 500 shares by the end of the year, adding gradually when the price makes sense. So when you add up everything, my total dividend income for January 2026 came out to $158. What I like about this approach is that it doesn't require active trading or constant monitoring. I'm collecting income, reinvesting it, and still staying invested in assets I'm comfortable holding long term. That's really the focus for me. Steady cash flow, disciplined reinvestment, and letting compounding do the work over time. Let me know how much dividend income you generated this month in January 2026, and feel free to share any dividend stocks or ETFs you think are worth looking into. That's all for this video. Thanks for watching, and I'll see you in the next one.